Hi, we are in the fourth complete comprehensive example in the chapter of dissolution of partnership firm. So let's go to the example sum. Example sum. Following is a balance sheet of A and B as at 31st March 2019, who share profits and losses in the ratio of 3:2. To the left of the screen, we have the balance sheet given, and on the right, additional information. On the above date, the firm was dissolved and the following adjustments were made. First point, A was to pay loan by Mrs. A and took over half of the investments at 10% discount. Second point, stock and remaining investments were sold at 10% discount. Third point, A and B agreed that B shall use the firm's name, for which he will pay rupees 40,000. He also agreed to pay bills payable at a discount of 10%. Fourth point, debtors realized rupees 35,000, bills receivable rupees 13,500, plant and machinery rupees 38,900, and building rupees 1,20,000. The fifth point, there was a car in the firm which was written off from the books. It was taken over by A for rupees 23,400. Sixth point, creditors were paid 90% in full and final settlement of their dues. Last point, expenses of dissolution amounted to rupees 1,700. We are asked to prepare the realization account, the partners' capital accounts, and the bank account in the books of the firm. So we'll begin with the realization account, followed by the partners' capital accounts, and then the bank account. There is no partners' loan in the liability side of the balance sheet. There's only a loan taken from Mrs. A. So there is no need to prepare any partners' loan account. So let's go to the solution. Solution. Realization account. Left side, debit side, right side, credit side. Particulars, rupees, particulars, rupees. We'll begin by transferring the sundry assets to sundry assets. Transferred. Stock 25,000 rupees. Debtors 40,500 rupees. Bills receivable 15,000 rupees. Investments 60,000 rupees. Plant and machinery 80,000 rupees. And building 61,000 rupees. Let's total the amount and bring it to the outer column. $2,81,500 is the total. On the credit side of the realization account, we'll begin by transferring the provision for doubtful debts. Amount 1,000 rupees. We'll transfer the external liabilities by sundry creditors. Account 75,000 rupees by bills payable account. ₹30,000 by Mrs. A's loan account. ₹25,000. The next item is workman compensation reserve. The workman compensation reserve, to the extent of the claim, needs to be transferred to the credit side of the realization account. But on scrutinizing the additional information, we find that there is no workman compensation claim against the reserve. So we will distribute the entire reserve among the partners A and B in their profit sharing ratio. Next item, by bank loan, external liability, ₹50,000. We've transferred the external liabilities. We'll deal with the additional information. The first point, A was to pay loan by Mrs. A. So partner A taking over a liability to A capital account, in bracket Mrs. A's loan. The amount of the loan is ₹25,000. A is taking over investments, half of the investments at 10% discount. And there is another item in the fifth point, the motor car, which was written off from the books of the firm. It was taken over by A for ₹23,400. So A takes over two assets by A capital account. The first one is investments. Half of the investments at 10% discount. Half of the investments is 60,000 by 2 or 30,000, and 10% discount is 3,000. So the investments is taken over at ₹27,000. The motor car is taken over by A as per the fifth point for ₹23,400. Total of the assets taken over by A, ₹50,400. Let's go to the third point. We'll come back to the second point, which assets are realized. We'll go to the third point. It says A and B agreed that B shall use the firm's name, for which he will pay ₹40,000, and he also agreed to pay bills payable at a discount of 10%. So by B's capital account, use of firm's name, it's goodwill of firm for ₹40,000, and B also takes over a liability of bills payable to B capital account bills payable at 10% discount. So the book value of bills payable is 30,000. After 10% discount, it comes to 27,000 rupees. Next, we'll pass the entries for amount realized from sale of assets by bank account. Second point, stock and remaining investments were sold at 10% discount. So stock after 10% discount, it's 25,000 minus 2,500 rupees. So we get 22,500 rupees. Investments, half of the investments are the remaining investments, and that is sold at 10% discount. So 30,000 worth investments at 10% discount is 27,000 rupees. The fourth point, debtors realized 35,000 rupees. So debtors 35,000 rupees. Bills receivable 13,500 rupees. Plant and machinery realize 38,900 rupees. And building realizes 1,20,000 rupees. Total amount realized from the sale of assets ₹2,56,900 rupees. Let's deal with the sixth point. It says creditors were paid 90% in full and final settlement of their dues. So to bank account for creditors paid 90% of sundry creditors, rupees 75,000 is 67,500 rupees. The seventh point, expenses on dissolution amounted to 1,700. Nothing is mentioned, so it's borne by the firm and also paid by the firm. So realization to bank account for expenses 1,700 rupees. Now we need to make a check to see if all the external liabilities have been dealt with. Creditors were paid in cash. Bills payable was taken over by partner B. Loan by Mrs. A was taken over by partner A. We have an external liability of bank loan which has not been dealt with. So we need to pay it off at book value. So to bank account for the bank loan. Amount paid 50,000 rupees. The entries in the realization account are completed. I'll remove the split and we can ascertain the gain or loss on realization. I'll total up the credit side first. $5,28,300 is the total of the credit side. and total of the debit side is 4,52,700. I'm writing the greater total on both sides, 5,28,300. On deducting, we get a gain on realization of 75,600 rupees. So to gain on realization transferred to partners capital accounts A and B, the total gain transferred 75,600. Profit sharing ratio between A and B is 3:2, and on dividing by 5 we get 15,120 rupees. So against A's capital account, it's 15,120 multiplied by 3, which is 45,360 rupees, and 15,120 multiplied by 2, which is 30,240 rupees. So this is a realization account. Next, we will prepare the partners capital accounts. Partners capital accounts. Left side debit and right side credit. We have particulars. Column for partner A, column for partner B, and again on the credit side particulars, a column for partner A and a column for partner B. We'll bring down the balance of capitals of A and B by balance brought down 30,000 against partner A and 40,000 against partner B. Next, we'll distribute the general reserve by general reserve account. Amount of reserve is 27,000 rupees to be divided in profit sharing ratio 3:2. So we get, on dividing by 5, we get 5,400. So in the case of A, it's 5,400 multiplied by 3, which is 16,200. And in the case of partner B, it's 5,400 multiplied by 2, which is 10,800 rupees. Next, we'll distribute the workman compensation reserve. By workman compensation reserve account, 8,000 rupees in 3:2. 1,600 into 3 for partner A, 4,800, and 1,600 into 2, which is 3,200 for partner B. The balance sheet items are done. We'll check the realization account for any entries for the partners' capital accounts. On the debit of the realization, we have A and B taking up liabilities. A taking up Mrs. A's loan and B taking up bills payable. So by realization account for liability taken over. $25,000 in the case of partner A and 27,000 rupees in the case of partner B. And on the credit side of the realization, the assets are taken over to realization account for assets taken over. Total asset taken over by partner A is 50,400 rupees. And in the case of B, it's 40,000 rupees. Finally, let's transfer the gain on realization to the partner's capital accounts by realization. Account for the gain. In the case of partner A, it's 45,360 rupees. And in the case of partner B, it's 30,240 rupees. So the items are done. We will get the amount of the final settlement. To bank account for the balancing figure, final settlement. We'll begin by totaling the credit side of partner A. The credit side totals to 1,21,360. The balancing figure, 1,21,360 minus 50,400. It's 70,960 rupees. The total of credit side for partner B is 1,11,240 rupees. After deducting 40,000 rupees, we get the balancing figure as 71,240. This is the partner's capital accounts. So we get a view of the partner's capital accounts fully in the bottom half of the screen. Let's prepare bank account next. Bank account. Left side, debit side, right side, credit side. We have particulars. Rupees, particulars, rupees. We'll bring in by bringing down the balance of the bank account. To balance brought down. From the asset side of the balance sheet, balance of bank 4,500 rupees. Let's check the realization account for the amount realized from sale of assets and payment of liabilities. To realization account. From the sale of assets. The total amount realized from the sale of assets is 2,56,900 rupees. And on the debit side of the realization, the payment to creditors By realization account, creditors paid 67,500 rupees. By realization account, for expenses paid 1,700 rupees. And by realization account, payment of bank loan 50,000 rupees. Let's go on to the partners' capital accounts to get the amount of the final settlement. By A capital account, for the final settlement, ₹70,960. And the case of B, by B's capital account for the final settlement, 71,240 rupees. Let's total it up. Total of the debit side 2,61,400. Total of the credit side is also 2,61,400. The tallies, our arithmetic is right. I'll remove the split and we can view all the accounts together. This was the realization account. Followed by the partners' capital accounts and then the bank account. There were no working notes in this sum.